while Wall Street is turning sour on Apple, our next guest has a bull case for the tech giant and a $4 trillion valuation call for 2024. Joining us now is Wedbush Securities Managing Director and Senior Equity Analyst, the one and only Dan Ives.
We'll get the shoe cam later. We will have the shoe cam later, but for now we just have awesome. you rose to the challenge for us. We appreciate it.
Yeah, came ready to rock it. Dan, let's start there. You heard us chatting Apple. So it has this tremendous 2023. There are some of your colleagues on the street maybe getting a little skeptical. Their checks, their own independent checks show maybe some weakness in iPhone demand. You heard me talking to Julie. I think there's nervousness about China as well, looking shaky. Again, also you heard, the AI story. People not exactly sure what the story is, what could be coming. But you say no, stick with this name. You still got to buy in 2024.
It's the movie Groundhog Day, right? I mean, if you go back a year ago, many of the haters were saying the same thing. Apple's going a lot lower. This is going to be and then the stock's up 50% because they continue to underestimate Cook and Cupertino. You're talking about the golden install base, 250 million iPhones, right now a window of an upgrade opportunity. We spend a lot of time in Asia, and I'm telling you right now, we are not seeing any sort of major cuts from the supply chain. Now, I'm not saying that this is roses and rainbows in China, but they are holding their own, gaining share, and I think this is a get out the popcorn moment as the stock sells off yet again. And I think ultimately a year from now, $4 trillion market cap.
And the watch issue, non-issue, or do you think it is something that is going to provide a little rockiness here?
Look, I think from a revenue perspective, it's really breadcrumbs. Now, I think it does speak to patent issues that they're going to run more and more into from a healthcare perspective. But again, if you look at where this is all heading, the innovation, you talk about AI, I believe they continue to play chess, others play checkers. This is about an AI app store we expect to get announced over the next year. That's going to be more.
Wait, what is an AI app store?
So there's going to be a separate, now it starts with Vision Pro from a form factor. Now many of you are 3,500, it's not going it's all about, and Josh knows as well, it's about developers. This is just setting the stage for what this is, the new form factor is going to look like in the next 2-3 years. Developers are the key. They're going to be building more and more AI apps from fitness to content to health that are going to be on the App Store. That's really going to be Apple's opportunity to further increase that services business. Services is a key of the re-rating that we are seeing in Apple. I think you go back a few years ago, $200 billion. Today we think it's worth 1.4 to 1.5 trillion. That is the key to where I believe this narrative is going to change over the next 6 to 9 months.
And you don't see that, because just sticking with that, faster growth, higher margin services story. Some of the skeptics I know, part of their downgrade was, we think that's decelerating. You don't see that.
Sure, many bears, they never thought Apple would hit $1 trillion, trillion and a half, 2 trillion. So the point is, the haters will continue to hate. They view it as a hardware company. We view it as disruptive tech in terms of the install base. Services, it's a teenager type of growth now. You look at the margin, what's happened there. iPhone's going to grow again, even when you take out currency. China is growing. And I think as this plays out, 225, 230 million units. And if that happens, I think many of the bears are going to be looking at this period, being like, how was I wrong yet again in Apple?
And Dan will be over here, patting himself on the back yet again.
And I would say, and Julie, it's not necessarily patting himself, it's trying to handhold investors. Out of the central casting, fire in a crowd theater first day or two of the trading year, those are predictable type of downgrades, but ultimately for us, it's about what our checks show us. We firmly stick with, I think a year from now, this is going to be a lot higher.
When you say doing those checks too, I'm just interested, and in your checks indicating maybe iPhone demand is holding up, do you have any line of sight, Dan, into what they're buying? I mean, when people are making those, are they looking at those higher margin Pro models?
Well, and that's it. I mean, we're seeing a lot of Pro models in China. That mix is huge from an ASP perspective. ASPs could be up $100 year over year. And I think the Pro mix, we think it's 75, 80% versus a historical 60%. That's huge for ASPs. And that's why we rely on our supply chain checks. That's really navigated us over the last year. And I think Apple's a name you got to call by having feet on the ground in Asia, not from 10th floor of an office building in Park Avenue.
Let's broaden it out a little bit, because one of the questions we've been talking about a lot in the first days of the year, kind of holding over from last year, is where else are we going to see the opportunity in AI, right? Who else is going to be making money from this besides just NVIDIA? And I know that you've had some calls on some companies before. Palantir is one of the ones you're very excited about. What's going to be the name that's going to benefit the most this year?
Yeah, because I think to your point, I mean, it was just the godfather of AI, Jensen, NVIDIA, as well as what Nadella's done, Redmond with the trophy case. This year, it's going to be about the rest of tech. I mean, when you look at software and chips, I think they lead tech higher. And you look at some of these names like MongoDB, the Messi of AI, Palantir. I look at names like Snowflake. That's another one you're seeing sentiment get much more negative. What this is going to do to the chip sector in terms of this cycle, that could ultimately, I think a lot of these chip names, you're also going to see M&A significantly. And then you look at the install base plays. What's Benioff doing at Salesforce? Look at Adobe, look at Oracle. It's one where we believe it's a 1995 moment. It's the biggest tech transformation in the last 30 years. This is not hype. And I think this is really the start of a fourth industrial revolution. We believe the new tech bull market has begun, despite the bears, winning a few battles the first few days of the year.
Palantir's an interesting one. So the Messi of AI.
It's the Messi of AI.
I'm not a big soccer guy, but I feel like you're saying something positive. Let me ask you about Palantir. It was a monster 2023 for Dr. Alex Karp and that crew at Palantir, but you say stick with it. It's still a buy in 2024?
The best pure play.
Why do you say that, Dan?
Because from the work that we do from a use case perspective, they're the first call. In other words, everyone focused on government, what they've done there, maybe some of the controversies. The reality is that they've leveraged that government expertise into enterprise. You look at AI.
So you see the commercial just keep on growing.
Right now, you don't see a major AI deployment where Microsoft, Palantir are not at least tip of the tongue in terms of some of these use cases. And that's our view. Our view is some will say Palantir is expensive, it's hype. This year they prove it. And I think that's the key as this all plays out for what I continue to view as stock that could ultimately double over the next 12 to 18 months.
You've mentioned Microsoft in passing a couple times, so I want to come back to that one. When does Microsoft actually start making money from AI, right? There's a lot of buzz around it, but it's not, there's nothing flowing to the bottom line at this point from it, right?
I think late January, when we look at earnings, I think the aha moment is going to be the monetization that comes from Copilot for Microsoft sooner than many are expecting. We think for every 100 hours of cloud spend, our partners are telling us 35 to 40 incremental for AI. And that's our view from Microsoft. This is a stock that's going to get re-rated. And ultimately, the street could be underestimating cloud growth by 20 to 25 billion as you look out into 2025. I'm not saying that they're going to pound the sort of table with massive guidance coming out of the gate. They're going to continue, as the tactician Nadella does, under promise and over deliver.
All right, Dan. Thank you so much. Fun stuff.